All right, everyone, we are live. Welcome. Today is Thursday, November 13th, 2025. I'm Gianni DePocia, your host. We are live here at Benzinga, and I am joined by a very special guest today, Henry Schwartz, the Vice President of Market Intelligence at the Chicago Board of Options Exchange, otherwise known as Cboe. And we're going to be having a very, I think, pertinent discussion given the dynamics of the market right now. We're going to be talking about a new Magnificent 10 index. It's no longer the Mag 7, guys. Cboe rewriting the rules. I love it. A new way to trade the tech titans. Henry, how you doing today? It's so great to have you live here with us. I'm going to be looking at what this new index you guys have whipped up is made up of.
Yes, great to see you, Gianni, and I'm excited to talk about it. You're absolutely right. It is very timely, right? So, kind of, it's been a really interesting year, and Mag 7 has dominated headlines, and if you like 7, then 10's got to be better.
Yeah, I'm with you. Okay, well, you have some index dynamics to share with us, don't you?
I do, yeah. So I love, my favorite thing at Cboe is playing with options data, and so I do have some slides to run through, and then I'm excited to stop and talk about kind of your views and what your listeners and viewers are thinking. So the Cboe Mag 10 Index is a brand new index. Okay, so most people are familiar with SPX, the S&P 500 index. Mag 10 is a new index. It is, before we get into kind of the nitty gritty, I just want to point out kind of a few high level stats on the market. So this will be the 6th straight year of record option volume for the industry. We're looking at basically 60 million contracts a day. In October, the average was closer to 70 million contracts a day. That works out to about 15 billion contracts will trade this year, which is kind of phenomenal. And you can see on this chart, we break it out by index option volume and ETF option volume and single stock option volume. Just kind of where we are versus where we were 5 years ago, right? COVID, it's changed the face of the industry. So, the volume we're seeing today is basically triple what we were seeing in 2019. So, double-digit growth, literally close to 20% growth in every segment we watch. So, there's also a very short-dated focus to it. Most people, have heard about the zero DTE trading. Well, that really is kind of changing the face of things as well. Basically, 2/3 of the activity we see today across all products is in options that expire within a week. Okay, if you go back about 8 or 9 years, it was 1/3 weekly, in the week zone, and 2/3 were longer dated. So that's been a real change and incredibly consistent. It's kind of been like that since 2022, when kind of daily trading became possible in the in SPX and some of the big ETFs. So if we look at the other kind of big sea change is retail participation or self-directed. I think a better word for this, at least for a good chunk of this user base, is pro-tail, because there's public data filed by the big brokerage houses that basically let us figure out how much option volume they're trading. So this chart shows you those firms that file these reports: Robinhood, Schwab, Fidelity, how many options they are trading daily. And you can see they only started these reports back in 2020, but you can see, 2020 was the meme craze, right? Robinhood was doing 5-6 million contracts a day. Well, they're doing almost 10 million contracts a day currently. They are neck and neck with Schwab. And when you actually add all these brokers together, you get basically close to about 35 million contracts a day, or half the market. So half of the listed option market now is coming from kind of this retail broker community. But like I said, I would tend to consider these brokers a little bit more pro-tail, because there really is a mix of sophistication and the one thing we really saw since COVID is retail's gotten much smarter about how they trade. So the drivers of
that, Henry, I don't mean to interrupt you, but like there's this perception like on in the trading community now that whatever retail is doing is wrong. But I mean, you look at some of the numbers this year. I mean, retail is quite frankly, kicked the butt of a lot of institutions this year. You know, a lot of institutions missed the rally off the April lows.
Yeah.
And retail's been, you know, beating them by a wide margin. And so, you know, it is part of a cycle. And, you know, maybe the institutions will have their will have the final say, you know, in time. But yeah, it's really unusual what's happened this year in that regard. And I think the chart that you're showing here really speaks loudly to that.
Yeah, I mean, they're used to, we used to, in the industry, sometimes they would call retail dumb money, and it's
Yeah.
not. It's really not anymore. And you just imagine the scale of that segment really matters, and the entire institutional community and the market mega liquidity community pays a lot of attention to that. So
Yeah.
this slide shows that 1 week dynamic I was talking about. So the blue bars here are the options that expire within a week. So that includes your 0 DTE. It includes everything out to a week. And for all products combined, you see at the top basically going from around 6 million contracts a day, back kind of pre-COVID, to 30 million contracts a day today. That growth is astounding. The longer dated flow has continued to grow as well, which is we're glad to see that, because it's not all just shifting to the front end. And then the lower boxes show you breaking it out by ETFs, index, and single stock. This is primarily an ETF and index kind of phenomena. If you look at the single stock world and the retail community, they actually drive a lot of that single stock flow. So the ETF and index is a little bit more of kind of a mix of pro and retail. So, but what we're seeing now is basically twice as much of the volume is in contracts that expire within a week versus longer dated. So, and this only became possible in 2022 because there were Monday, Wednesday, Friday options in SPX and SPY and a few other products. And in April 2022 is when Cboe kind of pioneered inserting those last 2 days, which has made this kind of a lot of daily trades possible. You might have read the journal article about Captain Condor. That's a daily trade, kind of a rules-based trade that we continue to see, and it actually doesn't show any signs of slowing down. Now we're getting kind of towards why we believe there's a need for a Mag 10 index. So there's currently about 5,700 underlyings listed with options on them. Okay, so that's all the indexes, all the ETFs, and all the stocks that have options on them. Despite the fact that there's almost 6,000 products, the volume is very heavily concentrated in the big names, right? So in the ETF world, it's going to be the things we're all very familiar with: SPYs, Qs, IWMs. Some of the more sectorized things like IBIT and SLV, silver and gold this year for sure. In indexes, it's always been a very, very SPX dominant story, and it continues to be. SPX and VIX together are like 95% of the flow there. And in notional terms, it's even more extreme because SPX is, very, very high value index. Now, so let's look at the single stock activity this year. So the top 10 out of these, nearly 2,300 single stocks that have options on them, the top 10 make up a third of it. Okay, and in this chart, I highlighted the Mag 10 participants that are in these top 10. So NVIDIA, Tesla, Palantir, Apple. It really is. People are trading the story stocks. They're trading these high flyers. It's just been that kind of year. And so when you add it all together, and Google, you have to be careful, right? There's Goog and Goog-L, and in some of my analysis, I actually just try to combine them. But in this case, I've kind of left it alone because it's a little bit messy to do that way. But the Mag 10 constituents, which are in the box on the right, make up over 10 million contracts a day this year, and it's a full third of the single stock volume. So by creating this index and listing products on it, we're letting people kind of get at these stocks that they're also already very, very active in a different way, and we'll get into that. So, and then this is the last one I want to show for now. Is the performance of the Mag 10 index and the individual constituents. Okay, so the screen in the middle is showing you the Mag 10, the S&P 500, the Russell. Okay, that's the Russell 2000 is basically a small cap index, and the Qs. okay, for the Nasdaq, and you can see that Mag 10 outperformance. I mean, you mentioned kind of, since the April lows. I mean, look at the scales are kind of funny to read, but basically from 400 to 750 for the Mag 10.
Yeah, incredible.
It's
Especially considering the
unbelievable.
size of those companies, right? I mean, it's
Yeah.
not easy to lift companies of that, $1 trillion companies, double them in 6 to 7 months, right?
Yeah, it's so, and then on the right, I basically just showed the each component, kind of what we're looking at year to date. It's funny, we're having a pretty red day today. So Palantir year to date is only up 130% now instead of 150%. So these things move, and that's why people like to trade them. I get it. Volatility is very, very attractive. I mean, that's what options are for, right? You get the convex payoff, and the more volatility you have, basically the more likely you're going to get some of these big swings. That's what vol is. But I mean, I kind of want to talk to you because I spend most of my time kind of thinking in the index world. What when you look at these returns and kind of the concentrations, what jumps out at you? We certainly hear a lot of chatter both ways, right? That this is this new kind of AI boom is changing. It's an industrial revolution.
Right.
And then you hear some of the other, some on the other side saying valuations are nuts and this is all going to implode. I kind of want to know where you come down on things and, what your thoughts are on, this whole complex.
Well, absolutely. There's so much to unpack here. Let's go ahead and pull up a chart of the S&P 500 here, just to kind of start at the top index level, because the Mag 7, Henry, as I'm sure you know, at the start of this year made up around 33% of the S&P 500. I think as of the middle of this month, the Mag 7, 37%. So if you add those three other companies that we have, in the index, AMD, Advanced Micro Devices, Broadcom, and Palantir, that's even higher. So I'm guessing, we're talking north of 40% of the S&P 500. And so, this is a big conversation going on in the trading community right now. Like, oh, market breadth is very bad. You only have a handful of stocks leading the market higher. And, there's really two sides to this discussion, because this year, you only have around 25% of stocks in the S&P 500 outperforming the index. So yes, we are seeing thin leadership being driven, by a lot of the stocks that you have in this Mag 10 index. But there's another side of this coin, and really, I spend a lot of time looking at markets around the world. I think that's a big trader's job. Yes, I mean, these companies are really at the tip of the spear when it comes to the AI revolution that we have. But you look at other indices around the world, and it's not uncommon to see, the 10 biggest companies making up like 80% of the index. So is the dynamic of the US market changing as, these mega tech companies become a bigger and bigger part of our daily lives? I mean, you think about, even just Meta. I mean, whatever social media platform you're using, Meta probably owns it. I mean, NVIDIA chips, all this AI stuff, it's in everything. Doesn't happen without it. So that's just kind of the new economy. And so in many ways, it's justified. I think Amazon accounts for like it's like 8 to 10% of retail dollars spent on a daily basis goes through the Amazon ecosystem. So, I mean, those are reason why they represent so much of the index. So, people say, oh, the leadership is thin. It's not going to last long. Like you said, we're having a pretty red day right now. But what I'd like to do actually is kind of just run through the 10 names of this Mag 7 and kind of just discuss where we stand. It's funny, we're talking about the AI revolution, and in many ways, Apple has been seen as a loser in the AI revolution. They really never developed their own AI. They're kind of working with the other leaders in this space, but it's more than just AI, right? You have robotics, you have all this other stuff going on, and it seems like Apple's having some success on that front. Actually, holding up a lot better than the index today. I think Apple. I'll preface this. Within the Mag 10, there's 4 of them, maybe even a fifth, that I think are really set up to do well going into next year. And I'm going to talk about that because rotation is the lifeblood of bull markets. You can't just have the same stock. Like NVIDIA has been the hot stock, right? But the best thing that could happen at this point, I think, is for a stock like NVIDIA to cool off and a new leader like Apple to emerge within this index. Because as you can see here, you hit that low just below 170 back in April. This one hasn't seen the same amount of gains as the other Mag 7 name or the Mag 10 names have. And so you've seen it start to accelerate really since August, right? Because Apple didn't do much since August. Then it started to accelerate. Whereas you look at stocks like Meta or Microsoft, those are the ones leading from April into August, September, and they've cooled off as of late. That's healthy. That's normal. That's rotation. You need that in order for the bull market to sustain itself. So I actually have a target of 350 on Apple into next year. Now, when it comes to trading options, one of the things you need to think about is the timing of that too, right? Because when what goes into the pricing of the premium, it's not just price, right? There's time factors as well. And so this is, kind of the art of the options trade, if you will. At what probability is a price level set to be achieved by a certain point in time? So I actually spend a lot of time thinking about time as a trader. You can't just think about price. You just want to think about price, just buy the outright stock, but then you lose the potential for amplified moves. You lose the opportunity for leverage. Basically, you're not just borrowing for price, you're borrowing time as well. So, a couple different ways you can trade this. I mean, I'm not going to come here and say, oh yeah, Apple's going to 350, in a couple of weeks, so buy some weekly calls. That's not a good way, good formula for success. And Henry, I'm sure you can speak to this too. I mean, isn't it something like 80% of options expire worthless in that ballpark? Is that right?
That is right. That's a funny statistic, right? Because in a lot of cases, people that might be using options as a hedge that are buying puts because they want to be able to sleep better as we're heading into year end and market's up 16%. That's insurance. You don't want your house insurance to pay off, right? You want you want to have a nice calm year, and that insurance becomes a cost that you happily pay because you're getting a benefit. So so you're right, and and the other kind of issue with that statistic, it's just a little bit too simplistic, right? People buy options and then they sell options, and you can as you mentioned, right? Options give you the ability for this directional, time-based, convex kind of payoff profile. You get in if if the move that you are looking for happens, you get out. That option still expires worthless in the end, but you're not in it anymore. So so I mean, we at Cboe we like to kind of, the real question is, are people getting the value out of the options that they need, right? Like, is it serving the purpose?
Right. Well, and so I'm not going to get too deep into strategies, but if you are bullish, you have the ability to trade different types of bullish option strategies, right? There are bull call spreads that happens, when you are doing a bull call spread, you buy the lower strike call, sell the higher strike call. And, in that case, you're looking for, you're moderately bullish, but not looking for, the stock to explode higher. Then you have, the bull put spread. And you're looking for some time decay, and bull put spread, you sell the higher strike put, buy the lower strike put, with the same expiration. So, you don't just have to do straight calls, straight puts, whether you're bullish or bearish. There's spreads you can do, take some risk off the table. Basically, one option is not going to work out, the other one will, and that's going to offset one another. A bit less risk to take into consideration. So, I mean, I'm an Apple bull. I think this is one of the best. It's actually just turned green on the day now, actually. I think it's one of the better looking ones in the Mag 10 going into next year. The other one that I really like, and I'm going kind of alphabetically here, where I guess, let's see, I'm looking at the list that you have here, is Amazon. Amazon had big earnings. And, this is an interesting one because, like I mentioned earlier, it's something like 8 to 10%, depending on how you measure it, of daily retail dollars spent go through the Amazon ecosystem. But as you can see here, up until, was that last week, 2 weeks ago, Amazon had not hit a new all-time high since February. It spent 6 to 8 months building out this new base. I like to see that as a trader that uses charts to trade. The trend is undoubtedly up, especially with this break to new highs. But what I'd kind of be looking for now is almost a retest. You had that big breakout. It's not uncommon for, oh, I wanted the trend line, not the circle here. Almost a retest here, for kind of like the technical foundation to be reinforced, because the trend is up. Believe it or not, new all-time highs are bullish. That is a feature of bull markets. But you had this breakout here. You're coming back down to retest that, looking for a higher low. And I'm looking for Amazon to kind of be a surprise within the Mag 10 going into next year. And I know it's not really popular to say now, but I think the consumer is going to have some tailwinds, lower interest rates going into next year, refi boom. Americans love to spend, guys. That's what they do. And that's going to benefit stocks like Amazon, I think, in time. So you had that nice earnings pop, a little bit of digestion after that. I think you want to be focusing on bullish strategies on Amazon on the option side of things. So, again, you're not going to hit 310 next week or next month. We're talking about what is the bias, right? That's half the battle, is what direction do I want to have my bias towards as a trader? Do I want to have a bullish bias or a bearish bias, and then develop strategies around that with risk always in mind. So taking a look at the next one, Google's been the real powerhouse. Let's see. You like to use Google or Google, Henry?
I usually go with Goog, but they're the same. It's
yeah, pretty much the same. They're just different share classes, but either way, nice trend higher on this. This is an example of one that's doubled, more than doubled. I mean, from that April low. I mean, we're talking hundreds of billions of dollars. I don't think Google's in the $1 trillion club, unless I'm mistaken. I know it's worth hundreds of billions. I mean, this company has doubled in its value over the last 7 months. I mean, do you realize the amount of people that have to be buying this name for that to be happening? Now, as bullish as this has been, I want to be clear, a 100% plus move in the span of 7 months usually means that some rest is warranted. Now, that doesn't mean that the share price is going to collapse automatically. That doesn't mean that Google's going to erase all of its gains from April. But when considering averages within periods of time, again, do you think that the next 10% directional move in Alphabet or Google is more likely to be to the upside or to the downside, especially within the next few months? So this is a name where I actually wouldn't be betting for that next 10% move to necessarily be to the upside. Even 5% move doesn't have to be 10%. I'd be looking for this to go sideways. And so I'd actually be looking for a bit more protection, defensive strategies. If you want to, get some puts, bear put spreads, bear call spreads, that might be one of the strategies that you consider. I'm not going to say to go and, sell any naked calls on this necessarily. But, there is, I think, the probability favors either prolonged consolidation or kind of a drift back lower, because simply from a value standpoint, right? Apple, Amazon just started hitting new all-time highs. Google's been hitting new all-time highs since September, but the magnitude of the move to the upside has been significantly larger in this stock compared to the others. Then you have Meta. So this is an example of one that is really broken down. I mean, it's actually pretty remarkable. Round trip. This is a pretty volatile for a company of this size. I mean, you almost doubled, not quite. I guess you should say it's a bit closer to like 60, 70% in that range. I'm just doing some quick napkin math in my head here. So, Meta was the leader coming out of that April low, but you hit the all-time high back in August. It's been struggling. So the trend was up, but you can make a strong argument from a trend following standpoint, a simple trend following standpoint, that it's actually turned down. Why do I say this? Well, you had this break to the highs in mid-August. You came back down, you rallied back up, and you formed a lower high. Let me tell you something, guys. When you start to see lower highs like this, that's a warning sign. But then look at this low. Now you have a lower low here in October. So it's really hard, as someone that studies charts and lives by the charts, to have bullish strategies on Meta when it's behaving like this. And then you had another lower high, and then don't even get me started on this gap. This is a terrible gap. And as you can see, the momentum has shifted to the downside. So this is actually a stock. When I see this and I consider option strategies, when I see this type of momentum accelerating to the downside, I actually would be okay with naked put buying on a name like this. Now, you do your own due diligence, but the way I play names like this, I'm not a trader that, does, oh, hey, what's Meta going to do this week or next? I mean, there's different formulas out there that you can consider. Like, you have the expected moves that can be calculated, like on the S&P, for example. A lot of traders that I know that trade options use those. But what I like to do is look out, 6 to 8 weeks ahead. And on a name like this, I'm okay actually buying naked puts, because there is some good momentum to the downside. I always have my downside target on a move like this articulated before I take the trade. And as soon as we hit that downside target at a price level, I'm out of that option regardless. So that's, kind of how I would approach a name like Meta, given its recent performance. Now, let's go ahead and shift gears again and take a look at Microsoft. Now, this is not a stock that has necessarily shifted its trend to the downside like Meta has. This one has gone sideways. This one has gone sideways. And, I found that a lot of traders struggle in sideways markets. So what does that mean? Let's kind of define that here for a sec. So I actually remember this very, very clearly coming out of that low from April, when we had this big gap higher in Microsoft. I said, guys, it's really hard to kind of stay bearish when you got a name like Microsoft gapping up, out of an earnings low back in April. And this is one of the leaders. It was one of the leaders coming out of that low. But you can see here, once again, it topped at the end of July. And the big warning sign that we had in this name was the lower high that came after the latest earnings gap back at the end of October. Now, unlike Meta, we've not made a new low. Okay. So the low, actually, did we? I gotta zoom in here. 492.37. No, you did not. You did not make a new low. So the low you had last week was at 493.25. That's still a higher low, but you're off of a lower high. I call this a mixed trend. So in terms of strategies here, you need to have range bound, I would argue, income driven type strategies on the option side of things. There is no clean and clear direction on this stock. So we always start with the trend, because the trend is your friend in this business. If it's a clean trend in one direction or the other, you can take directional bets when you're trading options. But if it's range bound, you need to address that fact and cater your strategies accordingly. Now, what would make me change that type of bias, that outlook? Well, if you start to break above this, 550, then you're looking at bullish strategies. But you start losing this 490, 495 zone, I think you can shift to bearish strategies. But in the meantime, I think you want to have range based strategies. That's not exactly how I usually do things, because I'm more of a trend trader. So, Henry, in that case, you're looking more at like straddles. Is that correct?
Yeah, or almost even like a wheel strategy where, you might sell a put. We're talking, keeping the trade size very, very small.
Yeah.
And kind of, being pretty comfortable that if it does start to get challenged, you might take delivery of the stock and then, kind of ride that stock back up and sell a call. So, sideways markets are great. I mean, that's kind of, we saw option volume continue to grow in 2022, which was a down year. But, a lot of that was just kind of, it was a very, very, mellow down year. And, that actually, seeing customers figure out sideways trades, straddles, strangles, or, selling a put spread and a call spread, right?
Yeah. At the same time. Yeah. Good.
Being kind of comfortable, like getting used to the behavior of a strategy like that, is part of the whole learning process. So, I have a few more slides to kind of go through what this index is.
Let's do it. And then I can continue the back half of these names afterwards.
Awesome. Sure. So, So let's kind of talk about, there's two things actually. It's very interesting, right? You're looking at the names that you were doing, right? There's, we have seen some really kind of disperse performance, right? Palantir up 140, 150%, Meta kind of choking a little bit. That's dispersion. That's basically, some stocks doing great, some stocks doing okay, and some stocks, choking. The truth is, I don't think any of these names are down on the year, but
No.
but when you have an index, okay, you're putting these all together, and Mag 10, this index is an equal weighted index. It basically like you put $100 into every stock. Okay, it's not cap weighted. The S&P 500 is cap weighted index. So when you put $100 into each stock, what you need to understand the difference between low dispersion, which is kind of they're all going up 6% together, or all going down 6% together. That's high correlation, which is the opposite of, and that's low dispersion, versus kind of, when things really start to separate and some things are going up, some things are going down. That's a high dispersion, and it actually plays kind of into the volatility of this index. So just to go really quick, we ran through what the symbols, what the stocks that are in there. These stocks do not change. Okay, it's going to be these Mag 10 stocks forever unless somebody gets merged out. Okay, so and because it's equal weighted, you basically want to reset every so often, because if you put $100 into each stock, like I said, and by the end of the month, Palantir happens to be up 10% and Meta happens to be down 10%, you no longer have $100 of each, right? You have $110 of Palantir and $90 worth of Amazon. So it's actually kind of flattened out at the end of the month and reset. So that's important to understand. It means what you're going to get is kind of a greater kind of diversification effect, because you're really not letting the concentration creep in. So that's very, very different than kind of some of the ETFs, even as you mentioned, if 30 or 40% of an index is in a handful of stocks, that won't happen with this. This is the opposite of that. And that's one of the attractive parts, and people need to understand that. And then these are cash settled European style index options, which means they're index options. The index I have a chart on is around $450. At the end of, at expiration, whether we're talking, we start out with monthly expirations. We'll probably have shorter term, even daily cycles eventually, but we have to start with just the monthlies. They settle into cash, meaning there is no assignment. You don't have to have the capital to buy the index. If you're long a call and it expires $2 in the money, you just get $2. It's what makes index options. It was the very first thing I traded when I got into the business many years ago, and it's just simpler. You don't have to worry about, people talk about pin risk, right? Well, my option's out of the money, and then the market moved in the last 5 minutes, and I was in the money, and now I got to buy a whole bunch of some underlying. It doesn't happen with indexes. You just get the difference. We're also going to have futures, and that's important, because futures and options are siblings, and if you have futures that are trading, it basically means the options can be more liquid, because that gives a place for the liquidity providers to hedge very, very efficiently. So a couple use cases, simply, understanding the difference between, this index and something like, a cap weighted, Qs or NASDAQ or something like that. Once you understand that, you may decide you do want long exposure to kind of that mix. It's the opposite of kind of heavy market cap differences, and we've seen heavy market cap differences this year. And so this is a little bit of like, okay, if you're not quite a fan of that, or you're not super comfortable with it, or that's kind of where this comes in. Hedging, if you kind of think if you kind of think everything's gonna crumble, right? If things are, I don't know. It depends on the day of the week, but I think everybody agrees valuations are stretched. Okay, nobody can predict a crash, even if Michael Burry is kind of announcing he's shorting some of these things. Nobody can predict that.
Yeah, but you hear you retired today too?
Oh, I did not hear that. I'll tell you when
he stepped down apparently today.
Interesting. When he announced when they announced their Palantir and NVIDIA put positions, I kind of did all the digging I possibly could to see positions that kind of matched the size they were talking about. The way those reports work, it's all kind of a snapshot as of September 30th for this quarter. I had a tough time finding any single position that fit what they were talking about. It's very possible they had a handful of different positions and it all added up. But regardless, it's nobody can predict the market. It's been tried, and there's a lot of people tell you they can, but they can't. But this product, basically makes a lot of things possible. Tactical positioning, looking at catalysts, right? When you do say, okay, what's the market going to do when the government reopens, or what is going to happen to these stocks? If you're into the kind of earnings season, and is one going to kind of pull each other up? As you mentioned, like there's a lot of kind of overlap, right? We all saw that AMD kind of explosion higher on the investment from NVIDIA. These things are tied together. The other thing that we are expecting to see this index used for is ETFs. So that's one of the other biggest kind of waves in recent history is the creation of ETFs that use options to get these to achieve their goals. Meaning you might want long exposure, but you want to put you want a buffer, and maybe to pay for that put or offset most of the cost of that put, you might sell a call. The other way to do it is, people, these yield products, right? That basically sell options, that are fully secured, but they do them very, very actively to create a really juicy dividend yield. So, and then the last thing I really want to push is, this is not just an index of a bunch of stocks that, some go up, some go down. The Mag 10, they have kind of a behavior, and correlation matters. If they're all kind of going different ways, you're going to have basically low volatility for this index because it's diversifying itself. You're also going to have times where the correlation really starts to spike, and basically everybody looks at this and says, man, all these stocks are super overvalued, and they get pounded all together, and that correlation goes higher, and that volatility is really going to explode. So I think you're going to see higher volatility of the volatility. So and then just a couple, these are pretty generic. This is from our Options Institute portal, which is a great learning resource. But simply, long calls gives you that upside hockey stick, as you were talking about. Long puts gives you the downside hockey stick, and vertical spreads. People usually start with an outright, but vertical spreads very quickly are important to understand for an option trader, new or experienced, because it lets you still get some of the convexity, but the cost is usually much lower because you're offsetting whatever you're buying by selling a different option. It just kind of makes things a little bit more reasonable. Like if you think if you think we're gonna have some extreme move down 50% or something, then an outright is probably the way to go. If you're kind of looking for more, like, I think I'm leaning this way, this is my view, spreads kind of fit the bill. So just a couple more, and then I'd love to dig into more. So this index is not launched yet. We actually got held up by the government shutdown because Cboe needed to get some filings in. The
question we had in the chat actually is when is this available for trading? So yeah you answered
so
that. Good.
We're looking at mid-December. Don't hold me to that, but now that things are kind of reopening, things really should get back on track. The index is published, though, so that blue line that you're looking at is the Mag 10 index on this chart. going back all the way to 2021. You see, even just looking to, you can see April. You can see the dip in April. Basically from 250-ish to where we are now, 450. And the green line is the realized volatility. So even there's no options currently, so there's no implied volatility to even look at. But you can do the realized volatility. You can do the math from the the log returns on a daily basis, and that's what we're looking at here. So you see basically the realized volatility kind of going from the 20% zone, which is kind of where it spent most of the last year or year and a half. Up to 80% in April. Okay, so if you think about it, remember VIX went from basically like 15 to 50, and so this you get more range out of it because it just doesn't quite have all the offsetting factors. And then I think what's actually pretty interesting too is if you look at the implied volatility of each of the components, right? So look at NVIDIA is basically trading with like a 50 implied vol. Same thing for Palantir and Tesla. This is not going to have that level of volatility. So the premiums are not going to be as high. It's not going to move the same way. So it's important for people to understand. So, and then just the key takeaways on this. It's cash settled. So whatever you do, you're never going to have to deliver anything. You're going to basically get cashed out for things that are in the money. There's no early exercise either. It's just you get what you get at expiration. So the 10 names are not gonna change over time unless there's a corporate action. It's reweighted monthly. Okay, that's something that's really important for people to understand. So, if you're involved in this index and next year Palantir is up another 150%, it's not going to pull this index up the same way, because what you're doing is at the end of each month you're resetting. Effectively, you're selling some Palantir and buying the other names if that's kind of what's going on. So, and then we're going to have monthlies, meaning third Friday. They'll actually expire into an AM special print, at least for the first until we get these kind of the shorter term options out, which really are the more popular ones. So, and that's it. I'm excited for to kind of see what how this product does. As you mentioned and as you laid out, like these stocks, people, especially kind of self-directed retail, pro-tail traders, incredibly active in them, right? They make up 10.5 million contracts a day across those 10 stocks. I think there's my plan to use this, and I'm very proud of trying to be the first trader in any Cboe product. So I'm doing pretty well for my track record, and I will be ready on the day that they do launch. But to be able to express a view maybe in one of the single names, and then kind of put on a trade in this Mag 10 index that complements that. If you think that if your view is that the Meta is going to continue to struggle, well then maybe a long put or a long put spread or a short call spread in Meta lets you put on that view, and then you look at it and you say, okay, taken as a whole, I think this index is going to hold up, and basically you may kind of take the opposite side in the index, and then you've got kind of an interesting risk reward profile. So so that's the index, and as I said, I'm happy to kind of dig into more of your thoughts on where we're going to be in 3 or 6 months.
Yes, absolutely. Before we do that, we do have a couple of questions in chat. First one from Todd. What is the ticker? I believe it's MGTN, right?
MGTN, absolutely.
MGTN.
You should be able. You can't see it on brokerage platforms yet. Generally, you can see it at the Cboe.com webpage. You can find it on some of the straight up data platforms like Bloomberg, for instance.
Okay, and then let's see. Are there institutions already committed to trading this? Is this a component in deciding to launch the product, and who are the market makers?
Well, that's a pretty informed question. I like it. The market makers are still, we're in kind of the final negotiations with that. So it looks like there's a lot kind of behind the scenes to get the market makers to kind of commit to making good liquid markets, because there's always a chicken and egg thing, right? It's a brand new product, so there's no volume. It's very hard to estimate the profitability for a liquidity provider, and they just they make their money on volume. So is this thing going to trade, 1 million contracts a day or 100,000 contracts a day? And what's the sources of flow? Is it going to be available on, say, Robinhood, for example? So there's a lot of people within Cboe that basically go and try to kind of wrangle all these cats and make sure that the retail brokers are going to, offer it on day one. The market makers are, the way that the industry works right now is there's basically 8 to 10 very large scale market makers. I'm not going to name names, but if you Google it, you will know exactly what I'm talking about. And we believe they're all going to be, everybody's willing to be involved if the volume starts to show up. Our job is to kind of, create this market, and we have incentives for that. And we have, it's a combination of resources and kind of market structure issues to help those market makers become confident that making a good market is going to pull in the flow. And so that's all still in the works, but that'll be wrapped up, and we still should be kind of ready to go within a few weeks. I would make a little bet that we get it off the ground before the end of the year.
I'm just as a quick sidebar. I know there's been a lot of the market environment over the last couple of weeks. I'm sure you've heard about this. Has been particularly stressful for some of the market makers. Like, we had the VIX backwardation. You had the VIX spiking like within 2% of the all-time highs a few weeks ago. So yeah, interesting days in the market making world from the chatter I've been hearing. But let's go ahead and pull up a couple more charts here. I got NVIDIA up on screen. So this has been the big mover, biggest company in the world. This thing more than doubled from that April low to its high that it registered at the end of last month. So again, similar thing that I need you to think about on a stock like this is, what are the odds that the next 10% move is going to be to the upside or to the downside after experiencing a 100% plus move in about 6 months. So that needs to go into your thinking, because that is statistically not common, right? And this is what we're doing in this trading business is weighing probabilities left and right. So I'd like to see NVIDIA drift a little bit more sideways. You do have a big earnings day coming up next week for NVIDIA on the 19th. So you better believe that's going to be moving markets. And, there have been some times where the earnings have moved, but actually the last few times in looking here has kind of been like a non-event. Maybe that changes this time around, but definitely be aware of that if you're going to be taking some positions, because you can get some big price moves coming out of earnings, especially. All right, next is Tesla. Tesla, believe it or not, is the only stock in the Mag 10 that has not hit a new all-time high this year. So that's particularly frustrating for someone like me. I look at rotation getting Tesla's getting hammered today, actually down 6%. Probably going to see this gap get filled here. But again, bigger picture, the trend is still up. So, look for signs of this decline stabilizing. And I actually think that Tesla is shaping up to be one of the big movers in the Mag 10 going into 2026. So, I need to see signs of a bottom here. You have some key support levels, kind of like in this three. I keep doing that with the circle, like this 360, 365, 380 zone. So I'd be watching for some buyers to step back into the picture around that. You see it start to stabilize. You can consider taking some, bullish strategies on that. If that breaks, then I don't know. Elon seems like he would probably be in trouble at that point. But if that holds, then that's a higher low and would actually reinforce the trend. All right, AMD. I'm not gonna lie, this was actually my best trade of the year, because I did own calls. I didn't know it was gonna happen. I'm gonna be honest with you. I did own calls going into that big jump on the 6th of October when I think it was OpenAI announced that they were making that big investment in AMD. But I saw, it kept going higher. But I want you to understand something. When you're trading options, sometimes it's better to sell at the initial part of the move, because you get, factors like implied volatility that start going crazy, and you're actually going to get more bang for your buck capitalizing on that volatility expansion versus waiting for prices to continue going higher, right? So that's a big part of options pricing too. So yeah, I had I had those calls, got out right there, and that was the end of it. It continued to go higher. I think it will continue to go higher. That's because I do own outright shares as well. Big bullish breakaway gap, as I like to call that, above that like 200, 210 level. I think that there is a bias towards the upside on this, but in terms of bang for your buck, it's not really huge. I've had a target on AMD around like 325, but that doesn't mean that you're going straight there. You can backfill a little bit, even drop as low as like 210, 215 without really changing the big picture of the bullish setup in this stock. Broadcom, the next one, and then we have one more with Palantir. Broadcom is another one that, more than doubled from that April low. You hit its all-time high back in late October on the 29th, and it's been slowly drifting lower ever since. Now, I kind of want to like lay out the landscape here, it's not uncommon to see semiconductors and just the tech sector in general outperform coming out of market bottoms. You know, certain sectors, certain areas of the market tend to do better depending on where you are in the market cycle. And so tech is one of those that does good early on in the cycle. But after these huge gains, again, that's the beauty of this Mag 10 index, is that you're not beholden to these individual names, because rotation is the name of the game. Apple hasn't done as well as Broadcom. Amazon hasn't done as well as Nvidia, you know, coming out of those April lows. And so now you can still be exposed to the biggest names in the market without concentration risk. I think that's so very important, because that is something that needs to go into your risk planning, right? So Broadcom here, I'm not really too excited about it right now. You know, again, it's not in a downtrend, but I'd be watching this like 320, 325 support zone here very closely. You start to break below that, you might have some opportunities for some outright bearish plays. I wouldn't be taking that right now, but you know, who knows if there's any other headlines coming on the chip side of things before year end. Seems like a lot of things are kind of walking on thin ice. And then Palantir here, you know, I had some nice trades on Palantir earlier this year. Again, the best performer in the Mag 10, up around 130% year to date. You hit that all-time high after right before earnings, but then you've been dropping ever since. So again, this is one of those stocks. I don't think you really want to see it lose like 165, 170. The valuation on this stock is so ridiculous. I don't have the exact PE in front of me today, but I'm sure you've seen these charts too, Henry, where like they show like the stock performance relative to its valuation, kind of like on a regression type chart. And this is just like so many standard deviations away from what's normal. It's like out of control. I really don't.
I think it's the PE is still over 400.
Yeah. So that's pretty remarkable. And so you know, you had the fact that you closed at a high and then gapped down. That's a bit of a warning sign. Again, this thing loses 165, 160. Look out below. So you know, you might have some asymmetric you know, opportunities to the downside on a name like this. So I'd be, you know, maybe taking some swings on the downside here on Palantir to wait for some confirmation, but you got some issues. So that's kind of where I see the landscape in the Mag 7. There's about 4 or 5 that I really like, about 2 that I'm looking for some sideways action, and 3 I'd want to avoid entirely. The beauty is that with this new index, with this Mag 10 index, MGTN, you can remove, or I should say reduce, that concentration risk on these individual names, kind of to spread it a little bit around, and then add the layer of options to it as well, because you know, when one of these runs, it has the ability to carry the market higher with it. So that's what I had for today, Henry. Any last thoughts, comments, anything else you're looking at? Just looking at the S&P here, we are still pretty much near the lows.
Yeah, we're getting a little beat up today, but you know, you said it early on, like you know, pullbacks are kind of healthy. You know, it gives us a buying opportunity, right? You know, nobody loves the market that just keeps trudging higher. So you know, I think that the Mag 10, it's going to be a really interesting product. This is new, right? There's a couple equal weighted ETFs out there, but there's no equal weighted indexes that have a lot of activity going on. You know, we believe, because of the component names and because of exactly what you're saying, you know, this is a way to add some exposure, and it's not cap weighted. It's not dominated the same way that, you know, by Nvidia. It's just not. So like, if your view is like, you know, which you know, the truth is kind of the way you were talking, like I'd have to go and break out the cap, but you know, to kind of say, yeah, I don't know how sustainable this is. Now, whether they're all going to go down or whether you're just going to kind of get a recalibration, you know, this index gives people a way to trade that. So I'm excited to see it, and you know, we think it will do well.
Couple final thoughts. First of all, it doesn't actually matter which direction the index is moving, right? Whether it's going up or down, because you know, you can trade the options on both sides.
Yeah.
Second thing I wanted to add is making me think of, and I put my market history on, when you had the .com bubble, when it burst finally in 2000, you know, from 2000 to 2002, all of those tech stocks got absolutely hammered, the ones that led the way up during the bubble. But like the average stock actually held up all right. So, maybe we see that type of history rhyme again, where like, all of these names just get hammered for a couple of years and just reset. But the average stock, in the S&P or in the NASDAQ actually does okay. So, yeah, but either way, it doesn't really matter, because with the index, there's always going to be an opportunity on the option side of things to make some trades. So,
Right.
Last question we have here from Mitch: will this trade 23 hours per day?
Great question. Not to begin with, but we actually are already having discussions about that, because we do run an overnight session, and index options. Basically, index options just trade off of the futures, right? They don't really care about the S&P 500. It's open 8:15 at night till 9:25 in the morning. The futures are open over that time. That's the market. This one kind of it should be similar. I think we will get them into the overnight session, but we want to see some liquidity develop in the index. We want to see customers, getting used to using it, and then, but it probably would start out with some sort of an early morning session, rather than kind of starting at 8 p.m. and doing the entire overnight. But we have it, and we do plan on adding this and some other products into that overnight session. So we're getting there. I mean, yeah, I'm sure you've seen it. The entire kind of brokerage industry is moving along towards 24/5, whether we like it or not. And so this is no different.
Last question we're going to take from Todd is: can you comment, Henry, on any ideas brewing at Cboe for other products?
I can't comment specifically, but we have a great innovation team, and super smart people coming up with kind of new things, all the time. We have some crypto products, which are continuous futures, which actually will also be launching pretty soon, to different, I guess I'd say adjacent, to this whole to the tech sector, certainly. Those are also coming along. Actually, I'm kind of excited to see that. It's been kind of this wave towards continuous or perpetual futures, to kind of give people an efficient way to get directional exposure. So, and it actually kind of that complements our. We have a Bitcoin index. It's made actually an index of Bitcoin ETFs called MBTX. That one's already listed. That one's already trading pretty actively. You can trade dailies in there as well. So there's plenty of stuff in the hopper here. So just stay tuned.
Okay, great, Henry. Well, thanks again. This was a fantastic session. I'm very excited about this new index, MGTN. The new Cboe Magnificent 10 Index, a new way to trade tech titans. So, Henry, thanks again for joining me. It was a real pleasure as always.
Awesome. Great to see you, Gianni. Bye, everybody.
All right. Okay, everyone, that's going to do it for today. Thank you so much for tuning in live here at Benzinga. We discussed a new way to trade tech titans, a very exciting new index coming down the pipeline from the Chicago Board of Options Exchange. I'm Gianni DePoce. Thanks for tuning in today, everyone. We'll see you next time. Take care now.